I think many Chinese audiences can learn from your
recent
ideas.
years, more countries started to use the local currencies in cross-border trade, offering alternatives to dominant US dollars. So how do you view such a trend, and will it enhance the stability of global financial system?
What we've seen really since the Bretton Woods and the Second World War and the Bretton Woods agreements and institutions that were put in place has been a dominant role of the United States and the US dollar in global finance and in global trade. The dollar is still the most used currency around the world. There are other, obviously, alternatives to the dollar. Probably the most used would be the euro. But really, in most transactions, and really not all, but most, the dollar is involved in one way or another. We are seeing some shifts in that trend, in particular around central bank reserves. We've seen some reduction from about 15 to 20 years ago, where roughly 70% of central bank reserves were held in dollars, and these days it's a little bit below 60%. So that's been a gradual diminution. And we've also seen other currencies, the advent of the euro back in the late 90s, and certainly the growth of the renminbi, which has been quite remarkable. If you look back just 20 some odd years, the GDP of China was around a little bit more than $2 trillion. Today it's $19 trillion. It's exceptional. And the renminbi was 1% of financial currency turnover. And today it's between 7 and 8%. So that's a 10% per annum growth rate from 1 to 7 over 20 years. And so if you were to think with the internationalization of the renminbi, which the Chinese government has been very disciplined and judicious about because they're managing a number of different factors, if we take a look and say, okay, the renminbi continues to internationalize at 10% for an additional 20 years, that would bring its overall turnover to a much higher number, probably close to 50%. I'm not suggesting that, but I'm just saying that I think a natural tendency here would be for alternatives to the dollar, and that China's economy has grown in significance so much that, and its maturation as a financial system is such these days that it can start to consider that opening in a much more powerful way. So some interesting trends to monitor. I think the currency space is a fascinating space to keep one's eye on, and it also shows some of the tendencies and relationships between countries and also how the financial system is evolving over time.
How do you view China's achievements in technological innovations and manufacturing? And what are the opportunities for the international investors in China?
Sure. So I think China's been a dynamic country to invest in and also to observe over a number of years. I was recently in China back in late November and had the opportunity to meet with a number of entrepreneurs and also heads of large financial institutions. And I thought my sense, and I go to China pretty regularly, my sense is that there was a renewed sense of optimism, particularly around DeepSeek. And I think what DeepSeek represented to China was really a catalytic, positive catalytic moment, in that some of the entrepreneurial and technological advancements that are happening organically within China reached such a level of sophistication in a geopolitical environment, which is difficult, as technologies are viewed as being very sensitive, particularly certain types of technologies. So I felt a tremendous energy from the individuals that I met with, different than I have in recent trips. So that's one observation. I think the other observation is the fact that China's markets, equity markets, did really well last year. So I don't remember exactly how much the markets were up, but it was I think over 30%. It was one of the better performing jurisdictions in the world in 2025. And interestingly, when we were here in Davos in January last year, one of the key sentiments that came out of the discussions here was that China still remained a very difficult place to invest. Confidence was low from international investors to deploy money into China. But I think we saw a major change during the course of 2025. And I think if you were to look at global investors and their portfolios, I think it's still fair to say that many global investors don't have significant exposure to China. And when I say significant, I mean in relation to the size of its GDP at $19 trillion. It's a huge economy and a critical economy. So compared to the size that China represents in the global economy, my strong sentiment is that most investors are probably underweight. And so that's an opportunity to put money to work in China, which again is a vibrant economy and a great diversifier for individuals and institutions that are looking to invest.
How do you assess China's practice in green finance and transition finance? And will emerging markets benefit from China's practice?
So China has one of the deepest and largest green loan and green bond markets. I think somewhere around 40 to 45 trillion renminbi, which is somewhere in the order of 5.5 to 6 trillion US dollars. That's quite large. And I believe that is the largest market for those types of loans and bonds. You know, the transition finance space is a critical space. The forum is very committed to sustainable finance and looking at how you bring financial institutions together to look at specific new technologies, such as sustainable aviation fuel, the production thereof, carbon capture, sequestration, and other examples. And the financing of the production of those alternative fuels remains very risky. But we know that heavy industries such as chemicals or shipping or trucking or aviation, these are very high emitting sectors. So we need to find solutions. The key is, how do you make those investments viable for those that are putting money to work? And the terminology that's often used is like, is it a bankable investment? So what we've done is tried to bring different industries together. So we would bring financial services, large financial institutions from around the world, including China, together with industries such as chemicals or shipping, or even these days in the agricultural space, which is also a very large CO2 emitting sector. And we bring the two communities together, so the sector and the financial services industry, and they discuss and evaluate ways to make investments more bankable. And oftentimes there's a role for governments to come in with support and incentives through industrial policy, and we see that around the world. But maybe just one additional comment on this space. Japan recently passed its budget. If you look, it's I think an $800 billion budget, if I'm not mistaken. A big part of those agreements were around, or the sort of the fiscal allocation that was planned through the budget and demonstrated through the budget was toward renewable sources of energy. So it is such as nuclear. So there's still a major investment going on. And maybe the last point is that the demand for electricity is going up. It's going up because the world is becoming richer. People are becoming wealthier around the world, and therefore they're consuming more electricity. But also, importantly, because new technologies like artificial intelligence have a large electricity consumption appetite. So we need to improve grids. We need to improve the production of electricity to fuel into these economic developments triggered by AI and the future. And so we have to be able to build that capacity. And that's a major area of investment, one where, and that's true for China, that's true for all over the world. And this is a really critical piece. So that's an element of the transition finance and green finance, and how you structure those investments are going to be critical elements of development over time.
Yeah. how do you view the future trends of the stablecoins and cryptocurrencies? And how do you assess China's unique paths in digital currency?
We've seen a very large change in the discussions around crypto assets over the last couple of years. If you go back 3, 5, 7 years and you came to the annual meeting, there was a lot of debate on the role that crypto assets could and should play within the financial system. I think that discussion has matured and it's evolved. And today, in the program that we had over the past few days here, but also the last couple of years, the promise of tokenization and what it means for the financial system is a vital part of the programming and also analysis that the World Economic Forum performs with its partners around the world. And so, to your point, this last year in 2025 was an exceptional year in the sense that we had large legislation in a big market, the United States, a very large GDP, very large consumer base, important systemic player. We had the Genius Act passed in the US, and this added a level of regulatory clarity for stablecoins. And stablecoins are essentially one-for-one backed digital token with assets, traditionally U.S. Treasuries, and considered a relatively stable token. And there are many different types of tokens out there, but stablecoins, the regulated type, have very strict parameters to do that. So that clarity, the bill's name was called, the Genius Act, and the clarity that Genius Act brought has helped solidify the approach that the U.S. is taking to that space. And it's also raised some interesting distinctions to other markets. So China has looked traditionally and continues to experiment with central bank digital currencies. That's another type of, that's a digital currency that is integrated and integral to the central bank and to the state, whereas a stablecoin is a private money. The CBDC, central bank digital currency, is integral to the fiat of the state and to digital representation of it. And so China is working very closely, the Central Bank of China is working very closely with the large banks on figuring out how to deploy the digital yuan in a more systemic manner through different experiments. If you were to then go to Europe, they have a number of different discussions, frankly, that are ongoing. But one of the key discussions is around the banking sector. Is there an opportunity to tokenize deposits if you're a financial institution? So it's a really interesting and diverse set of options out there. I think there's a lot of experimentation. In addition to the Genius Act in the United States, we've also seen regulation in Hong Kong, Singapore, and the UAE. Regulatory clarity is really important to solidify the industry.
How can the developing countries benefit from the financial innovations, not falling behind?
Yeah, it's a key question. One of the elements that was raised frequently in the conversations here and has also been written about with respect to stablecoins. So stablecoins, U.S. dollar stablecoins, have roughly there's about 320 billion in circulation. Okay, and a lot of that ownership. A lot of the ownership, those that hold the stable coins, are in emerging economies. And so if you're an emerging market, and let's say your central bank is not as disciplined, or they don't have the policy rigor that some of the larger countries might have, and let's say as a result of that, there's some concern around inflation and the strength of the local currency, stablecoins now provide an option, and it's an access point to the U.S. dollar at this point in time, because roughly 90% of stablecoins are U.S. dollar issued. So it raises some interesting questions around the sovereignty, the monetary sovereignty of certain emerging markets, not all, but some. And this is one of the pieces where if you were to ask the BIS and other groups that are out thinking about risks in the financial system, they point to this and they say it's not without risk to issue these types of tokens that people can buy and basically exit their currency into an alternative quite easily. So it raises some interesting questions. If you look at a traditional financial infrastructure like SWIFT, they're still moving through their messaging system somewhere between $15 and $20 trillion a day. So it dwarfs everything I've just said. So still the traditional system through SWIFT, which is the way that most money still traverses the globe, is progressing well, and SWIFT's volumes, the volumes of messages, are growing at roughly 10%. So, again, it's a really interesting example of how the world, we say that globalization has passed by, but in reality, if you look at the money flows, there's still a lot of interconnection that's out there, and I think that's a positive. And there are also alternatives, which is great, alternative technologies to traditional rails, and competition. So those are all really good and useful characteristics.
Okay, let's come to our last question. Talking about the global financial reform, which one or two areas should be prioritized? And do you think China can play a more positive and constructive role in the global financial governance in the future?
I think the answer to that is absolutely yes, and it's very encouraging that the IMF opened an office in the way that you're describing it in China. It's a $19 trillion economy. It's no longer an emerging market. So I think the way when we think about the financial architecture and the financial system, it's a symbiosis. And what I mean is, on one hand, the traditional institutions have to allow space for China to be represented in a way that is commensurate with the strength of its economy. And at the same time, China has to open and internationalize to meet that moment. And so my sense is the government has been prudent and disciplined in how it's opened its markets, its bond markets, its currency, and so on. But it's, to be part of that international system, that opening has to continue. And as we sort of talked about before, the growth of the renminbi in terms of foreign exchange turnover, it's been growing, but it's still, compared to other currencies, quite small. And there is a disconnect with the size of China's economy and that reality. So I think my point is that there needs to be a convergence on these pieces, and hopefully that will happen in due course.
Yeah, so do you have confidence in China's economy and a more positive role in the future?
I mean, China has an amazing economy. The numbers just came out, very good GDP, a very large surplus, $1 trillion surplus. I think China, as someone who has great respect for the country, I come and I see where the approach of the government to set a direction strategically, and then to have the various components of the economy line up to deliver on that objective, is a very unique set of characteristics to the country, and that's a very powerful thing. So absolutely, there's confidence in China's economy and the role that China can play internationally, and also I think you're seeing China playing a more international role, frankly, in a period of time where there's a lot of tension geopolitically. I'll just cite an example. I observed recently the strategic partnership between Canada and China. Electric vehicles, agriculture, finance, energy. So here are two countries coming together on a bilateral basis. China, a very big country, Canada, a good-sized country, but not as large as China, certainly, and thinking through where there can be a win-win situation on certain elements. And I think in today's day and age, we'll see more of those bilateral deals between countries, and China will be a beneficiary of some of those. And we'll also see more regional cooperation such as the ASEAN-China Free Trade Agreement. So I think that is a feature of the future. That's a feature of global trade. That's a feature of also global finance, because these markets will become more intertwined over time. So that's a manifestation of globalization in a different way. Maybe it's globalization 2.0 or 3.0, I don't know. But it is a manifestation of that in today's day and age.